morning, everyone. Welcome along to the first of three Entrepreneurship for All Finance Academies. We've got three wonderful sessions lined up for this week. So whether you're joining us just for today or you'll be coming back on Wednesday and Thursday, we're very happy to have you here. It's good to see some familiar faces. I know that some of you have joined us recently for the autumn school, for the hackathon, or maybe you've joined us for some of our other events. And if you're new here, welcome along. It's lovely to have you too. My name's Megan and I'm from Vantani Education, working together with my colleague Marianella, who's also here. But today we're actually handing over to a colleague from the women's organisation, Jan, who will be leading us through today's session. Now, before I hand over to her, just a little information about the three sessions that we're going to have this week. Today, Jan is teaching us all about financial resilience. She's going to be looking at building a safety net for your business, which I think is a really important topic and a great way for us to start off. And we've got two lovely guest speakers joining us as well. Then tomorrow's session will be led by Ros Dean, also from the women's organisation, and she's going to be talking about aligning financial planning with your values. And then finally on Thursday, we have our final session with Pamela Pokorny from EIT Food, who'll be talking all about sustainable finance. So we hope that today and throughout the week, you'll find lots of tools, resources, encouragement even to help you in the financial planning of your businesses. So welcome everyone. I can see there's a couple messages already in the chat. So good to see we've got Palestine here, we've got Georgia, we've got Greece. Where else have we got? Let's see. We've got Ireland as well. Fantastic. Lovely. Welcome, everyone. So, Jan, it's over to you. Please take it away.
Thank you, Megan. So what I'll do, I'm just going to share the screen so we can all see the slides.
Lovely. We can see the editor view. We'll just give it a second. Perfect. We see the presentation, Jan.
Brilliant. Can you see it?
Yes, perfect.
Thank you, Megan. Good morning, everyone, and welcome to today's session, the Financial Resilience, Building a Safety Net for Your Business. My name is Yan from the Women's Organization and also Enterprise Evolution, and I'll be your host today for this session. And it's great to see so many of you joining us across the network. And today we're going to talk about something sit at the heart of every successful business, the financial resilience. It is not just about having money in the bank, it's about creating the systems, habits, and confidence that allow your business to stay steady and even when things don't go to plan. And over the next hour, we will explore what financial resilience really means and how to identify financial risks early and the practical steps you can take to protect and strengthen your business. We will also be joined by two fantastic guest speakers, Donna Williams, the founder of Hayfield Bookkeeping and Accounting, and Sue Chambers, the Senior Investment Manager at River Capital, who will share real-world insights and practical advice from their experience working with small business. So whether you are here to improve your cash flow management, plan ahead with more confidence, or simply pick up a few new ideas, you are exactly in the right place. And on the screen, you'll see the QR code where you can scan the QR code and take you to the Entrepreneurship4All learning platform if you haven't signed up. So now let's get started. Just before we dive in, we'll take a quick look at what we will be covering today. By the end of this session, you'll be able to understand the concept of financial resilience and why it matters for every small business, and identify the key financial risks that could affect your business and the ways to reduce them, and understand how the EU Late Payment Directive protects small business and supports better cash flow stability, and learn some practical strategies to build a financial safety net. We will also make a short discussion, a quick reflection. So each of the slides, you'll see some reflection points, activities, and insights from our guest speakers to keep things practical and relevant to your business. So as you listen today, think about your own business and where you are strong financially and where a little more structure or planning could make a big difference. And we'll start now looking or exploring what financial resilience really means. So what do we actually mean by financial resilience? In simple terms, it is your business ability to withstand and recover from financial shocks, things like a sudden drop in sales, delayed payment, or unexpected cost, without losing stability or long-term viability. Financial resilience doesn't mean avoid challenges, it means be prepared for them. It's about having a system and a safety net that allows you to stay calm and make confident decisions even in uncertain times. A financial resilient business can recover faster from setbacks, inspire confidence in lenders and investors, and create space for innovation and protect employees, customers, and brand trust. So here's a quick reflection for you. On a scale of 1 to 5, how financially resilient do you feel your business is right now? With 1 being fragile, and 5 being strong. So let's give a few seconds for you to have a think about, where do you think your business right now in terms of your financial resilience? If you could share a reflection, a comment, that'd be great. I'll just have a quick look before we move on. We have a lot of people joining us from all across the world. Thank you very much for joining today. Brilliant. We got a few people. Most people are below 3, and that's what we're going to talk about today. Hopefully, we'll move up you to the scale. Thank you. Thank you, Jane. Yeah, we've got a few people in the middle. Good. Hopefully, there'll be space for you to improve. Brilliant. So in the next few slides, we will look at 3 practical pillars that make up a strong financial resilience and explore which one your business might need to strengthen the most. Financial resilience doesn't happen by accident. It requires intention and structure. And this is where the 3 foundational pillars come into play. And they are the cash flow management, emergency funds and reserves, and diversified revenue streams. And think about them as the building blocks that support a stronger and more adaptable business. And together, they help you to manage your cash effectively, prepare for emergencies, and reduce risk through diversified income. And there's a reflection here again for you. Which pillar, before we move on to talk about them a little bit more in detail, does your business need to strengthen the most? A couple seconds for you to type in chat again if you want to share those things: cash flow management, emergency fund, a diversified revenue, before we talk each of them in more detail. I'll have a look at the chat now. Well, we got some people saying they wanted both, like the cash flow management, emergency fund as well. And some will think about the diversified revenue. That's brilliant. It's good to have your input. Thank you very much for sharing with us. So it's good for you to start to think about them before we actually talk a bit more in detail. So let's talk the first pillar. Cash flow really is the lifeblood of any business. And the studies show that 82% of small business failure are due to poor cash flow management. And even profitable companies can fail if they simply run out of cash at the wrong time. And here are some of the practical strategies to manage your cash flow effectively. Using cash flow trackers like Excel, tools like Xero and QuickBooks, and monitor income and outgoings weekly, negotiating better terms with clients and suppliers, and sending timely invoice reminder. And don't forget your rights under the EU Late Payment Directive. Business can claim interest and compensation when payments are delayed. And we will look at it a bit more in detail in just a moment. But before that, a quick reflection for you as well. What is your average monthly income and expenses? And do you currently have a positive, neutral, or negative cash flow? So if it's positive, that means your income is more than your expenditures. If it's neutral, you just break even. If it's negative, it means your income is less than your expenditures. I want you to just have that reflection. And if any of you would like to share, you can put neutral, positive, or negative in the comments. Good. We got Majah saying it's positive. That's really good news. Currently neutral. Okay, we've got some people saying it's neutral. Okay. Neutral. Currently negative. Trying to hit. I'm already have Excel file with my undergrad cash flow man. Brilliant. Focused. We've got someone said very focused. Neutral. I haven't seen anyone put negative. That's good news. Brilliant. And then I think having those apps or the Excel sheets in Zero will help you really stay on top of that. Brilliant. So let's turn our attention, as we mentioned about the cash flow management. Let's turn our attention to look at a little bit more in details about the EU Late Payment Directive. And this directive was introduced to tackle the issue of late payment in the commercial transactions, something that affects almost every small business at some point. It applies to both business to business to government transactions across the EU. And its main goal is to make sure that suppliers, especially small, medium-sized enterprise, get paid on time and fairly compensated when payments are delayed. Under this directive, public authorities are generally required to pay their suppliers within 30 days, and private business are expected to pay within 6 days, unless a longer period is clearly agreed and fair to both parties. If payments are late, businesses have the right to claim interest and compensation, which helps protect against the knock-on effect of cash flow disruption, and is a key piece of legislation that promotes fairness and financial stability. And even your business isn't trading directly within the EU, it's worth understanding because these principles reflect best practice for healthy payments culture everywhere. And in the next slide, we'll look a bit more closely at the specific rights businesses have under the directive and how they can use them to strengthen your financial position. So now let's take a closer look at the key rights businesses have under the EU Late Payment Directive. Under the directive, you have three main rights. The rights to prompt payment. Public authorities must pay their supplier within 30 days, and private companies are generally expected to pay within 60 days, unless otherwise agreed, and is not unfair to the supplier. And the right to the statutory interest. If your client pays late, you're entitled to charge statutory interest without needing to send a reminder, and this helps disencourage habitual late payers. And the right to fixed compensation. In addition to this interest, you can claim a fixed minimum compensation amount for recovery cost or if necessary. You can also claim reasonable additional cost for collection. And these measures aim to build a fair payment culture across Europe, helping small businesses protect their cash flow and plan ahead with more confidence. As Mariana said, you'll have the slides later in the resources pack, so you can have them look at them a little more in detail. So if you ever face late payment, remember you have the legal tools to support you, not just the goodwill. It's about standing up for fair business practice and ensure your hard work is respected. So now we've just covered how to protect your cash flow from late payment. And let's move on to the next pillar of the financial resilience, which is emergency fund and reserves. So the second pillar of financial resilience, emergency fund reserves, is it's all about creating a financial buffer to protect your business against unexpected disruptions. Things like we just mentioned, late client payments, could be equipment broke down or sudden drops in income. Having an emergency fund give you the peace of mind and help you make clear and confident decisions instead of reacting under pressure. It's about being proactive, not just surviving the next crisis. A good general rule of thumb is to aim for 3 to 6 months of your fixed cost, business costs, things like your rent, salaries, insurance, and essential subscriptions, etc. And how do you build it? Save a small, consistent percentage of your income each month. Even 5 or 10 make a huge difference over time. And you can use automated transfer to make saving effortless. And most importantly, keep these funds separate, ideally in a saving or instant access business account, so you're not tempted to dip into it for everyday expenses. And here is a quick reflection. Imagine your biggest client cancels their contract tomorrow. Could your business continue for the next 3 months? I'll just give us a couple of seconds for you to reflect on that.
Jan,
Yes, Mariana?
hello. Just to let you know that maybe before you move on to following topics, we can check because there are a few interesting questions coming in the chat.
Yeah, I was just about to check the.
Lovely. Okay,
Brilliant.
I can let you know or read them to you whenever you're ready.
Okay. Brilliant. Thank you, Megan, for your reply to some of the questions. So just have a look at the chat. And I think we need to, we will send you the link to the EU Late Payment Directive. And with further information, we'll definitely send that through the resources. Yeah. Right, the reflection for this slide about the emergency fund reserves is about, whether, if you have a client cancels, whether you will be able to survive, have the fund to cover for the next 3 months. We got some people saying yes. Brilliant. We've got people saying, yes, we will send you more details around about the EU Late Payment Directive. I'm just going through the chat. Oh, sorry. Slides going through. While I'm checking the chat, let's just go through some of the, depends on the big customer. We've got Tama. It would be difficult to survive for 3 months. Okay. Some good reflections here. So if your answer is no to that question, okay, so about whether you would survive one of your biggest, we will need to start to think about it. May be a signal to start building that financial cushion. Even a small start is better than none. Okay, we will also explore how diversifying your income sources can add another layer of resilience and stability and helping your business stay strong, even when one area slows down. Okay, and thank you for everyone sharing in the chat. We will look at the next pillar. It's about diversified revenue streams. So the third pillar of financial resilience is about diversified revenue streams. And this one can truly transform how stable your business feels. And why does diversification matter? Because relying on one client, as we just talked about, one contract or one product creates high risk. And if that one stream slows down or disappears, your entire business can be thrown off balance. So by contrast, when you have multiple income streams, your business becomes far more stable and even more open to new opportunities. And let's look at a few ideas for you to explore. There might be other ideas. Feel free to share in the chat. We just explore a few ideas. The first one is about adding a digital product like guides, templates, or online courses based on your expertise. introduce a membership or subscription model that creates a recurring revenue, offer online workshops or consulting services to reach new audience, partner with complementary business for affiliate or referral income, and explore low effort passive income options that keep supporting your business in the background. The key is not to stretch yourself thin, but to build a small connected income stream that ring-fence one another. But again, I want you to take a moment to think about your current income sources. How many do you have right now? And could you add one more this year? How many would you have at the moment? And which one of those we discussed or something else you were thinking about adding another income stream you're thinking about? And feel free to share in the chat. I have a look at the chat now. New ones. Well, got a question about Tama talking about the digital product. So, for example, one of the clients I worked with, and she is teaching hair salon owners to teach apprenticeship, and she has teaching products and where she wanted to deliver workshop, especially those with special needs. She's obviously developed those training materials, and she initially was thinking about just doing the workshop, physical workshops. And one of the things I told her to think about the digital products is really to having those training materials become digital products like a booklet or training material where people can download, and we can sell on her website or through different platforms where that would be an income stream for her without physically delivering those workshops. Does that make sense, Tama? Yeah, brilliant, thank you. And we have someone say they have 4. That's brilliant news to see they have a different income stream. And with regard to passive income, again, if you think about the digital products, the workshop, if you invest time, you have to invest the time and your expertise into those things. So again, another example of someone, a client I worked with before, she was offering we call embodiment workshop across the different sort of countries, part of the country, especially she would live stream during summertime. And one of the things we discussed about the passive income, and she was thinking, yes, I will have to invest some time. So she rented a room down south of the UK, and with a really lovely view from the room that she can see the beautiful scenery. And she spent the whole January and February there and recorded all the courses where she would normally doing live stream or physically. She recorded those courses, and she found it and explored some app where she can upload those courses, and those courses can worth quite a significant amount of money for people to purchase. And with that investment, she'll be able to sell those online courses in those apps, and she's making significant, consistent passive income stream with that. So for those income stream, definitely you really need to invest time and think about, bring additional income. Brilliant. So lots of thinking about that, and thank you very much for sharing that in the chat. And thank you for Megan for replying some of the questions that people ask. We will go back, if anything we miss, we'll go back to those questions and share in the resources. Brilliant. So now we have just explored the core pillars of the financial resilience. It is time now to bring in our guest speakers who work closely with small business every day. They will share the real-world insights and practical advice to help you strengthen your financial foundations. And our first guest speaker is Donna Williams, the founder of Hayfield Bookkeeping and Accounting. And after that, we'll be joined by Sue Chambers, who is the Senior Investment Manager at River Capital. And let's start by welcoming Donna. Hi, Donna. So let me just see if I can see you. I think I've just seen her joined.
Yeah, can you see me okay?
Oh, brilliant. Hello, Donna.
Hi, can you see me okay?
Yes, yes.
Yeah.
Yeah, I can see you now. Thank you for coming. Welcome, Donna. And Donna supports entrepreneurs in building financial confidence and putting simple, effective system in place and stay organized year round. So I'll start probably with the first question. And or do you want to introduce yourself very briefly?
Yeah, so I'm a small bookkeeping and accountancy practice. I've been in business now for just over 1 year, but I've worked in finance for 13 years now.
Oh, thank you very much, Donna. Yeah, it's great to have you. So I think I would just start by the first question. What would be the one financial mistake you often see business owner makes?
So what I would say is business owners avoiding the numbers because they can become overwhelmed and focusing on the revenue generating activities, getting the money in rather than keeping on top of the numbers each week or month.
That's right.
A lot of business owners may be waiting until year end to start looking at your figures when you're preparing tax returns, and then it's too late to make any changes within that tax year. So
Absolutely.
not keeping your bookkeeping up to date, which hides any cash flow problems or missed expenses, and relying on gut feelings rather than
Yes, yeah, without looking at what the real numbers tell you. Yeah, that is absolutely
Yeah.
right about, when we work with the business and those, and then often, with people coming and say, oh, I hate maths, but it's not that difficult. Yeah, it can be just looking at your income expenses and using some of the app and then using some of the services you provide would definitely help them as well. And then, oh, what's happening with my sharing screen? Do you know, Megan?
Don't worry, Jan. I've just taken off the share screen so we can see Donna's
Ah.
video a little bit better.
Oh, okay. Thank
Sorry
you so
for
much. No problem.
interrupting you with that.
No, it's all right. Yeah. So this is the first question, and then we'll go to the next question. Sorry. What are the effective ways, as we talked about earlier, it's about managing late payments, Donna?
So one of the things is send your invoices straight away. Don't delay. Get them out there. I know a lot of business owners sending invoices is not a nice job because there's lots of things that go into sending the invoices sometimes, but send that straight away. I would use automated reminders. So as soon as it is overdue, an email goes straight out to your client. Make it easy for clients to pay. Let them pay either online, set up apps like Go Cardless if you have recurring payments. So make it really easy, not just online bank transfer.
Yeah, really good point, isn't it, about that? Making it easy for them to pay. That is really good point. Yeah.
So keep on top of your bank, reconcile your banks weekly so you know who owes you money and what is outstanding. Be consistent with communication. What I do is I have templates. So if it's overdue, if I send first overdue payment, I've got a template, and then I've got a second, if they ignore that. So it's kind of taken, you can get decision fatigue as a business owner. And if you've got them templates in your emails ready, you can just click the button and it's gone. And the emotion's gone out of it as well.
Yeah.
And sometimes it is good to keep credit control separate from the business owner because the business owner has normally got that relationship to keep the sale. So if you have someone in the business that can do credit control for you, that can be, you can have a good cop and bad cop. So you can stay the business owner can stay good cop, and then you've got somebody in the business that can be credit control that is chasing for payment.
That's right. That's really good advice, Donna. Thank you for sharing that. I'm making a lot of notes for that. That's brilliant. And what do you what are the sort of simple process that can make it easy to stay organized and financially throughout the year? As what would you advise? Yeah.
So to keep organized, I'm a big believer on keeping on top of your bookkeeping, whether that is on a spreadsheet or on software. But there is a lot of software available now that is free and really easy for business users to use themselves if they, don't have a bookkeeper or an accountant. I would say there's so much resources out there now as well, audiobooks, podcasts, YouTube. So you get to learn the numbers yourself. Don't always rely on your bookkeeper or accountant just to tell you everything. It's good as a business owner to understand what the numbers mean and the profit margins and your P&L and your balance sheet.
Yeah, I think that's really important. I think what you mentioned, Donna, in here. So although we have services like yourself, professionals to helping them, but for a business owner, you still really need to upskill those knowledge in finances. And as this is really part of the Entrepreneurship for All, we have a finance module to help you to gain knowledge and really become more confident, manage finance. Within the skills that, apart from just running the overall business, it is really essential part of that. Yeah. Well, thank you very much, Donna. Is there anything else you'd like to cover?
Well, I think with the digital world now, there's a lot of software out there that can help you. What I find is a jumble of lots of different softwares, because there's never a software that does everything for you. So it's a bit of trial and error of finding the right softwares for you and your business, and automate as much as possible. Like use an app to take a photograph of your receipts. What I do is if I buy something for the business, I don't take that receipt home with me. I just take a picture right there and then and throw it away, and it's gone out my brain then.
That's right. Yeah, that's really, really good piece of advice. Brilliant. And let's move on to the next question. What is the sensible way for business to plan ahead, for upcoming tax or the financial obligations?
Yeah, so it's a good idea because a lot of banks now give you tax pots. So you can create a pot on your bank account where you can take out a set percentage or a set amount each month or week based on what your sales, depending on what country you're in as well, depending on what taxes you need to pay. But you can work out, I normally go above what I need to put in. Say, for example, I will put 15% of every sale away into a tax pot. And then at least when it comes to filing your tax return, you've got some left over there, that you've got a bit of cash flow left over in the business.
That's right, and I think we mentioned that in sort of emergency fund reserve, you could have a specific a bank account set up for that, just for tax purposes. Like you said, what percentage depends on what country you are in, but it's having that sort of system in place and become part of your habit, and that is important. Yeah, and thank you for sort of reinforce that sort of knowledge as well. And finally, the last question about is what's a good way for business owners to educate themselves and build confidence in their financials, apart from you said about the video and podcast? Is there anything else they can do?
Yeah, so if you do have a bookkeeper or an accountant, they will help you and educate you along the way as well. If you have meetings occasionally, don't be scared to ask questions. They'll be very happy to pass their knowledge on to yourself as well. And probably one of the best ways to learn is just, once you've got your financials together, is go through it, go through your P&L, go through, and it's kind of just working. Every business is going to be different. Everyone's P&L is going to look completely different. So along with the basics that you can learn is learning what your KPIs are and how you can improve them each month.
Yeah, and I think you're absolutely right. I mean, work with a lot of business owners. One of the things about time management, we've got customers to serve, we've got a product to sell, we've got marketing to do, but don't forget you've got finance and bookkeeping to do. But I think it's really important you dedicate a specific time, whether that's weekly, monthly, but don't leave it to sort of after 12 months. Keep on top of that is really important. Yeah. Well, thank you so much, Donna. It's really, really insightful. I made a lot of notes myself as well. And, I love how you, highlighted the importance of staying organized and building a small, consistent financial habits, so your advice about managing the late payment and creating simple process, and that reduces stress through the year. It is something I think every entrepreneur can relate to. So thank you very much, Donna. Really pleasure having you here today. Thank you. And now let's continue our discussion on our financial resilience from a different perspective. And I'm delighted to introduce our next guest speaker, Sue Chambers, the Senior Investment Manager at River Capital.
Good morning, Jan.
Morning, Sue.
Morning,
Morning,
everybody.
Sue. Okay, yeah.
Sorry.
It's a pleasure to have you. Sue works closely with growing business to help them strengthen their financial position, manage cash flow effectively, or prepare for investment or expansion. So welcome, Sue, and thank you for joining us today. Well, let's go through some of the key questions. And, what are the first thing you look when you're assessing a company's financial health?
So apart from financial health,
Yep.
basically we do look an awful lot at a business as a whole. We look an awful lot at the management team, as well as the product or the service that they're selling, to make sure we think that there's a market there.
Yeah.
But from a financial perspective, I always look first at the bank statements. There's a myriad of information in bank statements. Some of the red flags that we can see in there are things like unpaid direct debits, more standing orders, things like that. You can see from the cash flow whether they're hard up against their limit every single month, and therefore, they are struggling. Another big red flag is I suppose the presence of payday lenders, the cash flow lenders that you see. It's sort of very quick to turn around and give you money, but they want it paid back quite quickly and a very high interest rate. So that's also the sign that somebody's sort of struggling at the minute, or red flags to a lender that things aren't quite going to plan.
Yeah, so the first thing you'll be looking at is their bank statement. I mean, one of the key things is really how their cash flow flows in the business, isn't it? Yeah, which we highlighted is so important to build that cash flow efficiently.
Yeah.
So, and how does a financial safety net impact, a company's ability to attract investment if they thinking about, sort of growing their business?
It does make a big difference. So if you can demonstrate that you can have 3-6 months that you can cover overheads and costs if something happens for 3 to 6 months, it's a great comfort to an investor.
Yeah.
When I'm assessing lending applications, quite often they only ask me for exactly what they need. So for this machine, or to fund this person's new wages, or to fund a marketing campaign. And I always kind of encourage, just put a bit more in there for a contingency in case things don't quite go to plan.
Yeah.
It's been really important of late. You've got, the energy crisis.
Yes. Yeah.
War in Ukraine as there's a lot of things that have battered SMEs lately that we haven't been able to plan ahead for and didn't foresee, such as COVID, the latest one, cyber attacks.
Yes.
So you try and, if you can, to make your businesses more resilient to that, and an investor will sort of say, okay, should the worst thing happen, they've already got that there to sort of back them up until schemes come in. I think it took the government about 6 to 8 weeks to introduce the bounce back loan to help businesses. So clients that had that in place were able to just ride it until those things came in. It can be important to the survival of the business as well. So
yeah, absolutely. I think you're right. Yeah, I think going back to our emergency fund and reserves, you need to think about at least 3 and 6 months, and then that's for the investment point of view as well.
It's very uncomfortable for someone, and the stress of panicking as soon as something happens. You think, I haven't got that there. So if you can plan ahead and have it there in place, it's much better for you and the business.
Absolutely. And the last question is, what's the sort of common financial pitfall you see entrepreneurs often? Sorry, there's last one about the pitfall often miss.
So, quite a few things. So clients can be a bit over reliant on either one income stream or one client. You're leaving yourself open, though, that if something happens to that income stream, or you lose that one client, that you haven't got anywhere to go. So we really encourage sort of diversification of products and services. If you can add another slight income on, that might be the thing that grows in future, or, as things change. Or you might be able to offer like a subscription model for one of your products, which means you get regular monthly cash flow, which helps you through the more difficult times. Instead of a lumpy cash flow where you might get, every now and again, get a chunk of money for a job that you've done. It's much easier if you can convert to that sort of model. Things are more predictable, and, bills are monthly. So to try and fit something in monthly that's coming in at the same time as bills is really helpful. The other thing I see as well is over trading. So that is where clients sort of chase the sales. They think it's the best thing to do is just to go after every sale that you can get. And while it's great that you're increasing your growth, you just need to make sure you've got the cash flow and the staff and the systems in place to manage that growth. Make sure you do sort of a quick rough assessment of your figures to make sure that, okay, you know, if somebody's going to take, a new client's going to take you 60 days, well, have you got enough funds in to pay the wages for those 2 months before you get paid? Don't be attracted by necessarily by big clients as well. They tend to pay slower,
the late
they've
payments.
got more buying power, so it's not always, you know, the best thing for your business to sort of say, oh, I've got a huge contract with XYZ. You know,
pay you, but then the time sort of, you know, whether you need to manage that sort of, you know, gap as well. It's brilliant. And I think, you know, we will now come to the last one. What would be the one financial habit, you know, separate the most resilient business that you see?
I'd say plan ahead. So having some sort of business plan in place and the financials to go with it is huge. So you can have a look, and you can even sort of test it for scenarios such as, what if I lose my best staff member? What do I do? You know, what would I do in that case? What would the effect be? And just sort of test your plan for things like that happening. What would happen if supply costs doubled, which is what's happened to many businesses lately? You know, you're probably going to have to increase prices, but will people pay that? So there's all these questions that by having a plan, you can kind of test it. And I would say keep going back to the plan, have a look at what didn't work, what didn't go out as planned, you know, and learn by that. You know, it might be that something better happened because you kind of went off plan a little bit, which is fine. But if you just refer back, you can say, oh, I forgot I was going to do that. You know, I was going to plan for putting a new admin in place to take the pressure off me, which means I can do some more business development. And that's why I haven't gained as many clients this month. So you kind of testing your theories all along, and it can help. That can help hugely with business resilience as well.
Absolutely. I think you're right about the planning, and you know, it can be a working document. You've got to review and look in that on the regular basis. And I think what you just mentioned about, you know, the things that we just discussed about having an emergency fund, reserves, you know, having a diversified income, that's all going to help you build a financial resilience in the business. Well, thank you so much, Sue, for your insight. And obviously, thank you again for Donna as well earlier for sharing your experience and, you know, such a practical insights. And it's always inspiring to hear from people like yourself work hands-on with small business every day and helping them strengthen their financial foundations and build confidence. The both conversations really brought our topic into life, showing that financial resilience is about preparation, like you just said, planning. It's a combination of awareness, habits, and a system that help your business stay steady. And no matter what comes your way, it is important we have what just Sue mentioned, the planning place. So, Megan, if we could share the screen.
Yes, you can go ahead and share screen. Don't worry.
Okay, I'm going to share the screen. We got the final session. Thank you very much, Sue, for coming, and Donna as well. Thank you, Donna, as well. Really appreciate your insight. Just going to carry on with the session. Let me just share. Okay.
I'll let you know when we've got the present.
Perfect.
Yeah, we see it.
The slides. Brilliant. That's great. Yeah. So as we move on to the final part of the financial resilience session, this is the sort of looking at bringing it together with some of the practical actionable steps you can start implementing right away, and think of this as a sort of safety net toolkit. The small habits that, you know, when done consistently, you can build a long-term security and confidence. So we'll look at the sort of 3 key strategies, which, you know, Donna and also Sue mentioned as well, which the first one is to automate savings to make and build your reserve effortlessly. And the second one is negotiate flexible terms to ease cash flow pressure. And last one is the insurance and legal safeguards to protect your business from unexpected risks. And we'll look at that in a little bit more detail. The first one was, I think Donna and Sue, they all mentioned early on, saving is not about big one-off amounts. It's about the small, consistent actions. And here, how you can make it, decide on a fixed saving percentage, even 5 or 10% of your monthly revenue. You set up automatic transfer into a dedicated reserve or saving account and label your accounts clearly, for example, emergency fund, tax buffer, or growth fund. And this approach helps you build this plan without feeling the pressure manually. It is decisive every month. So the reflection here is, if you saved just 1 or 2 or 5%, here we go, average monthly income for the next 6 months, how much would you have by then? You can have a quick calculation on that. And I think, it's often more than you expect. And that's really the foundation of resilience. Yeah, so don't know anyone would share, if it's doing 5%, could you actually, what would be the amount that you would expect at the end of the 6 months? I hope you could do that calculation. But now let's talk about another powerful, but very often overlooked tool is negotiating flexible terms. Strong financial resilience isn't just about saving money, it's also about managing your cash flow smarter. One of the most effective ways to do this is by negotiating some of the flexible payment terms with your supplier. And here's some of the ways you can make this work in your business. For example, request extended payment terms, like we just earlier mentioned, moving from 30 to 60 days, if it helps you balance your income expenses. And negotiate some seasonal rent adjustment during a quieter period, and ask for volume discounts or bundle offers if you're loyalty customers. And remember, negotiation should always be about mutual benefit. Offer something in return, such as prompt payments or long-term loyalty. And here's a reflection for you. Think of one regular cost that in your business that you could negotiate. What could you ask for, and what could you offer in exchange? What benefits can you offer in return? And even one successful negotiation can free up hundreds in working capitals, easing your pressure and improving your resilience. So with one, good saving habits, flexible terms, every business still faces unexpected challenge, which is where the insurance and legal safeguards come in. I think, Sue early on just touched on that as well. For example, the recent cyber attack, those are the things with the maybe unexpected challenges for business. When we talk about financial resilience, insurance is often overlooked, yet is one of the most effective ways to protect your business from the unexpected shocks. Having the right insurance coverage means that when something goes wrong, client disputes, property damage, or data breach, your business have a safety net. It's about preparing for unpredictable so that one incident doesn't derail everything you have built. Here are some of the most essential insurance types that small, medium-sized business across Europe should consider. You have a look. The professional indemnity insurance protects you if a client claims your advice or service caused them a loss. And this is vital for consultants, accountants, designers, or anyone giving professional guidance. Public liability insurance covers you if someone is injured or their property is damaged because of your business activities, for example, your office, workshop, or event, etc. Employers' liability insurance, if you have employees, this is mandatory in most EU countries. It protects your business if a staff member becomes ill or injured as a result of their work. And the business interruption insurance provides financial support if your operations are disrupted by unexpected event, like a fire, flood, or supply chain breakdown, etc. And the last one is the cyber liability insurance. increasingly important today. This helps you recover from cyber tech data breach. And each business is different, so it's important you review what coverage best fit your sector, location, and your client base. And remember, regulations and insurance requirements can vary between EU countries, so always check your local guidance to ensure the compliance. So having the right insurance and legal safeguards give you the business a strong protective layer. It's not the most exciting topic, but it's one of the most important when building a long-term stability. The key steps include reviewing your contracts regularly to make sure terms are clear and fair, and ensuring your business complies with GDPR and data protection laws. And here's a reflection for you. What's the biggest vulnerability in your business right now? Is it the lack of insurance coverage, unclear contracts, GDPR data security, staff employment law, or the fifth, cybersecurity risk? Have a think about those areas. You can share with us in the comments as well. And identifying these gaps is really the first step towards closing those gaps. So let's have a quick look at the chat. Got so many chats coming through. Brilliant. Someone said the lack of insurance coverage. So you need to go and, Zakia, thank you very much for sharing. You can go and check some of the insurance coverage you need for your business. Brilliant. Got some people saying straight the GDPR, the data protection, etc. Great. So now we've covered the 3 pillars of financial resilience. We also just introduced the financial safety net. Thank you very much. Number 3, the GDPR as well, information about that. And vulnerability, got Raggy saying the effect of climate change sometimes not clear, cover the government, insurance companies, or the insurance companies, yeah. Sometimes, let's have a look at the last one. Number 1 about insurance coverage. Okay, so thank you very much for coming into those chats and have your reflections. So after this, you need definitely do some further research into the right insurance cover for your business. So hopefully that would help you to improve vulnerability in your business. So let's move on to sort of, as we wrap up, we want you to remember those financial resilience is about creating the confidence and control in your business, and be aware of your rights and use the available tools like the late payment directive, and keep building those small safety nets that protect your future. So what would be the sort of final reflection here is the one action you would take to build your business financial resilience? Is it this cash flow management? Is it the emergency fund, or diversified income stream? And always be aware of the legal rights, the tools such as the late payment directive to strengthen your financial resilience. And thank you for all joining today. And a big thank you again for our guest speaker, Sue and Donna, for sharing their expertise. And you'll find links to further resources, videos, and articles in the QR code to access the E4All Entrepreneurship4All learning platform if you haven't signed up. And you can scan the QR code, and there's a specific pathway about building your financial knowledge. As Donna said early on as well, as a business owner, it is important to upskill knowledge in finance so you can build your financial resilience in your business. And thank you very much for all of you attending the session. And we will share the slides in the resources. And don't forget, tomorrow we got my colleague Rod talk about how do you align your financial obligation with value. And we got Thursday about financial sustainability. And thank you so much for everyone joining today. And don't know whether Megan has anything to add.
Yes, just a
Yes.
quick word. Yes.
Brilliant,
Thank you
thank
so
you.
much, Jan. Thank you for leading the session today, Jan, and thank you, Donna and Sue, for sharing your inputs as well. That's been really
Yes.
valuable, and I've enjoyed as well seeing the questions popping up in the chat. There's been
Yeah.
some really great thought-provoking questions there too. So thank you everyone who's provided a question and also responded to one of the questions. That's great to see. As Jan has said, we'll be back tomorrow. Let me just share the link with you so you can see the details on that. It's at the same time and it is also at the same link. So if you've registered for today's event, you can join us for tomorrow and for Thursday as well. It's through the same registration and the same link. You don't need to sign up again to get that information, but we look forward to seeing you there in the next one. I'm also going to share with you as well the link to our LinkedIn group, which is where we can always continue the conversation. You are very welcome to post something in there, or if you see a post that you think, hey, I know the answer to this, or I'd like to know more about that, please feel free to add a comment to any of the posts that you see in there too. I know a few of you have shared your LinkedIn contacts, so please feel free to come and join us over in the group as well. And I think that's just about it for us. Marianella, is there anything else you wanted to
I just wanted to thank
add?
everyone. And actually, Megan, if there's anyone here who would like some answers, some questions to be answered, maybe tomorrow or Thursday by our experts who are coming to help us with this other financial topics, use the LinkedIn group. Feel free to write questions
Yes.
there. We're all there helping each other, answering to each other, and maybe we can address them on the 2 sessions that are left for this Finance Academy. So thank you all for being here. It's been great. Thank you.
Thank you. Thank you very much.
Thank
Thank you, everyone. Goodbye.